22nd of March, 2019. Going to talk a little business, but we're not going to get too involved with this. Business is not my specialty, but I'm kind of doing some refinancing myself, so I'll talk briefly on that. And looks like the Dow just fell 460 points as recession index or indicator flashes red. There's a couple other things in the news they're suggesting here. Why did the Dow plunge? Banks and tech stocks drag down market. They say buying panic in bonds sinks banks. Now, if you're watching gold at all, gold fell down to 1285 less than 3 weeks ago, kicked back up to 13. I think maybe it settled at 1318. It's a big indicator. You start to see that gold surge in price, then this whole thing's going to tank. Now, there's a lot of people that are talking about some sort of inverse curve. These type of things I'm not really sure about, but suggest that when you see this, it's 100% spot on. We've seen it in 2007, and a lot of people are seeing it now as of today, which means we have 300. It's suggested that we have around 365 days until this thing is in a full rout. So that's 450. It looks like it's just going to be unstable until then. I am not a financial expert, but I will tell you that I got a great deal on a Citibank card, and my credit's doing okay. I've been working on it for some years. I had a pretty sizable hit. Everybody had the pretty sizable hit. 2007 was rough on everybody. Since this is the news, I'm going to say this right away. Tyson recalling 70,000 pounds of chicken strips. My God, has there ever been a time when they're not recalling chicken strips? Okay, another thing on Facebook, strong millions of passwords without encryption. GM investing, and that's a surprise. They're investing, but they're also laying off people. I'm going to go back to the stocks real quick. 450 points. U.S. recession indicator flashes red. Here's the general news here. We have the index. It shedded 1.8%. S&P 500 closes down 1.9%. NASDAQ plunged 2.5%. It was the worst performance for all three major indexes since January 3rd. The yield on 3-month Treasury rose above the rate on 10-year Treasuries for the first time since 2007. Okay, so we have another indicator here. 2007 was not a good year. A shift that scared Wall Street. Investors had piled back into stocks after selling off in late 2018. The flattening yield curve, or the difference between the short and long-term rates, has worried investors for months. A narrowing spread is typically seen as a sign of long-term economic confidence is dwindling. For decades, an inversion has been a reliable predictor of a future recession. Friday's flip added to the pressure on the Dow that was building before U.S. markets opened. Okay, so this is going to go on and tell you a little bit more detail about China, and it's happening. Now, if your credit's just okay, or if it's doing slightly better than average, like I said, I happen to get my credit up. This is going to talk about something that's definitely pertaining to us. It says, why did the Dow plunge? Stocks tumbled Friday as weak manufacturing reports in U.S. and abroad sparked fresh worries about global economy. Another catalyst for sell-off, a closely watched signal of recession, reared its head for the first time since the Great Recession. The Dow Jones Industrial Average closed down 460 points, or about 1.8%, at 25,500. Let's see, a measure of U.S. manufacturing activity fell to 21 months, and the index of manufacturing in the Eurozone plunged to its lowest since 2013, igniting new fears of recession in the region. Meanwhile, the yield curve inverted for the first time since 2007. And that's the key word here. This is a big financial stuff that these financial guys will talk about. There's a guy that does some great work. He's called something or something in the Silver Report. Maybe I'll leave a link. But whenever they talk about the yield curve inverting, it's bad news, and it's been a good indicator since, I don't know, I think the Great Depression. So that means that a Treasury bill that matures in 3 months is yielding 2.45%. slightly more than the yield of a Treasury note that matures in 10 years. Put it simply, that means investors don't have lots of confidence in the longer-term economic outlook. A flatter yield curve is the new normal. It's not going to be the new normal. Economist Gregory Dako of Oxford Economics wrote in a note to client. All right, I'm going to skip ahead real quick and talk about this Citibank group. Okay, so Citigroup led the slump in banks with 4.9% loss as bond yields continue to drop, threatening the profitability of financial companies that make money from lending. Now, these guys were sending me all kinds of stuff in the mail, and I was ignoring them for months. And I got a relatively high credit card that I'm paying on, and I've been trying to pay more on it, and I try to get them to lower my credit card rates. They just wouldn't do it. And so I picked up this envelope, and I gave them a call. These guys are willing to give me 0% interest for 21 months. And they said after that 21-month period, not even to worry about that prime rate. They said they'll probably give me an even better deal, or they'll put me back in a 0% or a low percent interest. And so if your credit's okay, or if it's not so great, but you got a high interest yield card, you might want to look into Citigroup because they're really offering good deals. And like I said, I got my Citi card right here, Simplicity card. And for 21 months, I'm going to be saving, it looks like $80 a month because I had a pretty high balance. I've been chewing at it, but the interest rate was so high. It feels like I was only paying a fraction of the actual total cost. I mean, these cards are ridiculous sometimes. But I'm slowly trying to chip away at that and just trying to keep my debt down, paying for cash, living below my means. And if I can encourage you to do the same thing, absolutely do it. It's not easy, but whatever you can do, every little bit helps. So that's all I have to say here about these finances and what's going on today in the financial market. I kind of think it's a historical day, so I had to go ahead and cover it real quick. I appreciate you watching, and if you liked the video, go ahead and hit thumbs up. Thanks for joining me on the curve.